The following is a presentation of TFNN. Live at TFNN, The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the author of Mastering Probability, Steve Rhodes.
Rhodes, who knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there had a magical Monday. Of course, what I really hope is for all of you in the Northeast that, I know our man Basil up in Boston, he must be snowed under out there, but hope that each of you are warm, nobody lost electricity, and thanks so much for joining us. Hey, let's have a fantastic Tuesday, and the easiest way to do that is to always remember that life happens for us, not to us. When you and I, when we make that one little shift, 3 little letters, 4 versus 2, I suppose 2 might be T-O-O out there, it makes all the difference in the world, because what it means is you've got the power, you've got the energy to find the gift in every set of circumstance that life is going to throw at you. And trust me, life is going to throw those circumstances to you. So learn to plant a good sail and let that wind be at your back. I'm absolutely grateful for your presence here today. I'm here to serve you, so go ahead, give me a call at 877-927-6648. Internationally, you can reach out to us at 727-445-1044. Of course, this is Terrific Tuesday. None other than Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, Dow Futures up 282 points out there, trading out at 17,332. S&P Futures down 25 points, trading out at 2028. NASDAQ Futures off 62 points, trading at 4208. Russell down about 15. King Dollar back 525 ticks right now, down 52 cents, trading out at 94.59. That must mean we've got some movement in the currency market. Oh, we do. The Great British Pound, we've got some movement in the euro. We'll take a look at the currency pairs. How about those hard currency pairs out there? Goldilocks up $6, trading at 12.85. Silver is flat, down 1 penny, trading out at 17.97. Light sweet crude flat as well, trading out at 45.19. A quick peek across the globe out here. Let's go see what we've got going on over in Germany. The DAX has taken a bit of a rest this morning. So far down 141 points. Not really that big of a deal in the scope of things. The FTSE down 60 points. That's down about 0.8%. But let's go straight to our markets out here. Let's go see what we've got going on. Let's start with the big picture first. So let's start with the big picture. Let's take a look at the daily charts out here, get an idea. Start off with the S&P futures. Let's look at the S&P futures. Let's take a look at daily. Then we'll take a look at several different time frames out here. This is the daily chart that's on our screen. Let me just simply go ahead and remove just this one thing here. So what do we know about the daily chart? Number one, when we take a look at the S&P futures, we know that they had been in a descending price channel. Those are the yellow diagonal lines from upper left to lower right going across my screen. In fact, I probably can even stretch this out. There you go. There's a nice big picture of it. In fact, let me just turn this off here real quick. Let me just turn off the TAS profiles for the moment. So here is our descending price channel. We saw Bryce and Price break above that back on January 21st out here. Then we saw it, in essence, really come back intra-session on the 22nd, test that level, and then move higher. At this stage of the game, we're maybe the ES Mini is going to break this 2026 level. It's going to be a key area for us to pay attention to. I'll show you a couple different reasons here in a bit. But at this stage of the game, just nothing more than just the normal volatility that we've come to expect here in January. So that's what's going on the daily chart out here. Still in a sideways move, but of course it did break that downtrend inside of the market. Now let's go switch over to some other time frames out here. Let's go from daily to 5-hour to 2-hour to 30-minute to 10-minute chart out here. So now let's go take a look at the 5-hour chart out here. If we take a look at a low, the one from January 15th, I believe that is the low for the year out here inside of the S&P futures. What you're going to see is a price point of 1970.25. So don't get yourself in a tizzy because the Dow futures futures are off, 300 points, or the S&P futures are trading out at 2029. You got to keep things in perspective. If I were going to teach you about A to B equals CD patterns, if I were going to teach you about just simply normal breathing patterns inside of a market, if I were going to teach you about where it is that you might want to buy into a market, what's that Fibonacci level that we would take a look at? From whether it's a move up to a move down, whether you wanted to go long or short. Most likely, that Fibonacci level that we'd be looking at is 0.618. Well, where's the market off of that low out here on the 5-hour energy chart from that low inside the S&P futures down at 1970 and a quarter? We're trading at 2028 right now. We are trading at the dead cat bounce at the 0.382 retracement level. Does that mean that it's going to hold? No, I wouldn't tell you to actually buy here at the 0.382 level. What I would say to you is that if that's all that the market is able to throw at you, it is a strong like bull, super bull market out there. So what's an area where I would tell you to look at? Well, that's going to be 2005. Look, if they think that the blizzard in the Northeast is now coming into the blizzard in the stock market here, and everybody is getting all screwy that, oh my goodness, the high is in and the markets are just simply going to crash lower and all those types of things, I would be saying, wait a minute here. If you're doing that now, what's going to happen when price gets down to just simply a potential normal retracement at the 2005 level? That's another, 23 points or so from where we're trading at right now. Now, we're also trading into an area where the lows came in from this past Sunday evening. So when the market opened up, it gapped down a bit. So we're really just coming back and we're testing those lows areas. So where are the spots that you want to be paying attention to? I caught just the very end of John's show out there. I think he had been talking about the 2027 level as well. That might be might be the weekly. I couldn't tell. My apology, because I was multitasking, trying to get the system up and running. But hey, the reality is, if we just simply take a look at this 300-minute chart, this 5-hour chart, 2023.50 becomes a support level. That's its TAS market profile low out there. So that's the 5-hour chart. Now let's just take a look at a couple other time frame charts out here. Let's take a look at the we're going to find anything out if we take a look at the 2-hour chart. Not really. So let's go over to the 30-minute chart out here. If we take a look at the 30-minute chart, and we were taking a look at possible areas, if this 2026 area fails, well, then where will price head to? Well, I gave you what that Fibonacci retracement level was. That was like 2005. But if we just take a look at the potential A to B equals CD pattern that is setting up, 2018 becomes your 1-to-1 A to B equals CD to the downside. Now, on this 30-minute chart out here, if we take a look at this, coming back here off of the low back on January 15th out here, what we will see is we don't really have, not only do we not don't really have, we don't have any kind of A to B equals CD to the downside. So let's just say as a hypothesis that we're still in a bull market. That's not even a hypothesis. That's an absolute fact. So let's say, for a fact, we're in a bull market. Let's say as a hypothesis that Steve is right, that his tools that he uses that says that the low that was put in on January 15 was a significant low in the market. If you were the person that was going to say, hey, this H.M. Gartley guy, tell me what he thinks. Tell me what his thought pattern is. Hey, I like those Gartley buy patterns out here. Well, where would those take place at? That's what may be unfolding if this 2026 level fails. It's possible that we're going to see our first A to B equals CD to the downside. If we just simply right now use the 30-minute chart to go ahead and gauge where those price objectives could be, we're looking at right around that 2017 area. That's your 1-to-1. 2007.75 is what we'll call. That's your 1 to 1.272. Once we get down to that 2007 level, now we're in that range of that 2005 area of that retracement off of the lows. Would be nothing more than a Gartley buy. Hey, if price hits that, do you fire away? No, that's not what I would teach you what to do. I would teach you to read the signals of the bulls and the bears, because the bulls and the bears, I don't care how many people are taking snow days, many of them, some of them still have to report for work, and they've got to punch in. So we'll see what happens when they go ahead and they punch in here at 9:30 in the market out here. So at this stage of the game, let's always keep things into perspective, and let's be willing to change that perspective as the market throws new information to us. But at this stage of the game, coming off of the most recent low to where price is at right now, It's only made a 0.382 retracement. That's nothing. If that's all the market can throw at us, and we got all kinds of bad news out there. We got all kinds of earnings, people, or the market responding to the earnings reports like Microsoft. I think they beat numbers, yet they're still trading lower this morning. We've got a number of things that are trading lower. Obviously, you've got Caterpillar, you've got Microsoft, you've got Procter & Gamble, you've got DuPont, all of those leading the charge this morning to the downside. To the upside, you've got Silicon Image, it looks like. You've got AstraZeneca. And that's pretty much it. Then other than that, I see a bunch of ETF structures out there. Let me grab a swig of water. That's a technical term for helping me to try to avoid coughing. So that's what's going on inside of the ES Mini. That's what's going on inside the S&P futures. Let's go see what's going on inside. Let's go take a look at, what arguably could be the strength. Well, let's look at the weakness of the market. Let's go take a look at the Dow futures. Where are we at inside the Dow futures? The Dow futures, they just simply can't make up their mind. They keep trying to break through their descending price channel. It did it on January 22nd, came back and tested on the 23rd, broke through, but yet closed above it back on the 26th. Hey, today, if price closes back above that price channel out here, that would be pretty impressive. That would be telling you that price is going to reject the lows out here. Now, what is it that could possibly reject lows? In fact, let's actually do this. Let me take this chart here, because at December 15th, December 16th area, let me just take a look at the retracements. Let me blow this up on my screen. So let's take a look at its retracements from low to high out here. And what we'll see is that the Dow futures are basically, they're cut through the 0.618 retracement level, down towards the 0.786. That's the next level. After that 0.618 retracement, that would be 17,268. The actual intra-session low thus far, 17,301. So I would have to say a push down to 17,268 would be natural, would be normal. If we take a look at what's going on inside of the NASDAQ out here on its daily chart, and we take a look at the same low out here, that same low being the January 16th low. Come on, there we go. If we see what it is doing, we go from low to high and take a look at its retracement. Remember, the ES Mini has gotten down to the 0.382 retracement level. The NASDAQ has not even made the 0.382 retracement. From that January 15th, 16 low to the high that came in on Friday out here, that 0.382 retracement, 41.9275, 76 out here. So again, what we're seeing in the market, it's in essence, it's really not that big of a deal, at least not yet. We'll see how the day plays out, because we got a lot of time left in the trading. Now let's go over and take a look at what's going on inside the currency market. Let's go take a look at. Well, let me go take a look. Yeah, that's okay. We'll use the we'll use the delayed time frame out here. Oh, we're gonna have to do that. We'll get back from this break. But if we take a look at the euro is popping. The euro is popping, but it's got some stiff resistance at about the 115.33-ish level. You're trading at 113.38, but the euro is trying to make a bottom here. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
How would you feel if you had a powerful decision-making tool that has the ability to find high-probability trading opportunities across multiple time frames in equities, currencies, and futures? Search no more. Take advantage of the best trade with the TAS Profile Scanner. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to help them make the best and most accurate decisions. Scan over 1,000 equities, currencies, and futures instruments for high-probability trading setups utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time, for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. Subscribers will also gain access to the December 9th workshop with John Logan. There's no obligation to pay anything. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Check out the new look of TigerTV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of TigerTV, then visit TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow futures off 293, S&P down about 28 points, trading at that 2026 area. Now, before we went to break, I'd mentioned the euro. So let's go take a look at the euro. Let's put this on the longer-term time frame out here. So we're taking a look at the euro-US dollar. Now, on this chart here that I'm going to put up on my screen, it's a monthly chart. I've got a 15-minute delay on it, so it's not going to be exact to the pip out here. But as we take a look at the euro, and we go down to the lows out here from 2000, the month that began October of 2000. We go from those lows to the highs that were put in inside the euro. Looks like that took place in July of 2008 when it got up to $1.60. So we're going from the low of 83 cents up to a high of $1.60 out there. And if we go from low to high, we're going to see that the 0.618 retracement level is $1.12 out there. We actually saw an intra-day, intra-week spike, just a tad lower. But as we speak right now, that level has held. Now, if we were to go take a look at this chart and try to identify and find the first Gartley buy pattern out here on a monthly chart, this is the very first one that has occurred. If we just simply come from those highs out here back in July of 2008, that's your A point. Your B point is going to be, let me try to stretch this out just a bit, maybe make it a little bit easier for you to see it out here. Your B point down here on October of 2008. Your C point up here in November of 2009. That price projection, 114. We're trading just a little bit below that as we speak right now. So, and there's really more than one A to B equals CD to the downside out here. So you've got your first potential Gartley buy pattern inside of the euro. Now,
If this area doesn't hold, then price will likely move down into about the 99-cent area. That's your 0.786 retracement level. Inside the daily chart for the euro, has a bottom form just yet. Well, as we take a look at the daily chart, you've actually got, as we speak right now, you've got a morning star reversal candle out here. Now, we got a lot of time left in the trading session, so I can't tell you exactly how this is going to end. But if it did close right here in the 113.55-ish area, you actually would have a bullish reversal signal on a daily chart at the 0.618 retracement out there. And that is something worth paying attention to and worth noting. Hey, let's go out to Philadelphia, to the city of brotherly love, to a brother that we love, and that's John. John, thanks for calling. Thanks for holding. How you doing this morning?
I'm very good, Steve. Steve, well, I just have to tell you, I admire your road mapping of the near-term future on the markets you cover.
Thank you.
I wanted to ask you, you laid out very nicely on your intro your views going forward here on the major U.S. stock indices. Question this. We've got a nest of lows on the S&P cash, S&P 500, in that 1990 down to, say, 1973 area.
Yes.
And I know you've thought this, asked this question. What market action will you be sensitized to that would tell you, Steve Rhodes, that a more important sell-off is underway?
I'd have to say a couple of things that we could look at. So first, thanks for those kind compliments. Much appreciated. The chart that I have up on my screen here, because you so aptly noted these lows that are nesting around the 1980-ish type level out there. And so what I have on my screen is I've got the weekly chart for the S&P 500. And on this chart here, it's got these green horizontal lines going across it. Now, these are the horizontal trading ranges, slightly different than what Bud Rolfs taught us about primary trading ranges. The difference here is that because I've got all of the electronic data, I've got all the opens and closes, I was able to, it wasn't me, it was the guys, some other programmers, some e-signal programmers that were able to program this for me to be able to identify on a weekly chart where these levels of horizontal support and resistance are at. So the first answer to that question is you need to see it close below the 1986 level. We haven't seen that since price broke above this area back the week of October 20, the week that began October 27, 2014. The area has been tested, but it has not been, and it's been rejected each and every time. So that would be the first thing that I would be looking for. I would say it would have to then really be a break of the trend line. And that trend line is the one that just simply goes back into October of 2011. The S&P, as a general market, typically makes a low in the month of October. It did in 2011. 2012, it came in just slightly later, back in November of 2012. In 2013, it was in October. In 2014, it was also in October. We've got a great trend line out here that goes back to that time period. That price level, John, is probably somewhere around the 1914-ish type of level. And that is where price would have to fall below before I would then begin to change my outlook. Does that help?
Hey, Steve, that does. Very specific. We do appreciate it, sir.
Thank you very much. Hey, John, thanks so much for calling. Have a great day. That was John in Philly. I believe they missed out on that dusting of snow. 877-927-6648. Steve Rhodes with TFNN. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We're off to the races. We got the Dow up 264, trading out at 17,414. S&P down 24 at 2,033. Composite off 73 points, trading out at 46.98. Russell 2000 down 13 points, trading at 11.88. To the upside, we've got TE Connectivity Limited up 3%, up $1.94. You got Rand Gold Resources up $1.70. That's up 2%. Novartis up $1.70. CommScope Holdings up $1.50. Silicon Image up $1.35. To the downside, Google's off $8. You've got Caterpillar down 5. That's off 6%. Amazon down $4, a little over $4, down 1.5%. Netflix off $4, a little less than 1%. Microsoft, though, taking a beating this morning, down 8.5% off $4. You've got Goldman Sachs off $3.40. Let's go see. I'm going to take a look at a ultra short-term chart. I typically don't show a 10-minute chart out here, but if we look for potential bottoming type signals out here, just see if we can see them. I'm going to put up the ES Mini on a 10-minute chart out here. And let me just turn one thing because I got an active account on there. Let me just turn that off for the moment. Give me a moment to do this. Hey, you guys don't need to see that. Okay. So now let's take a look at this. Let me put the 10-minute chart out here. Slide this over. Okay, great. So now we've got the 10-minute chart out here. Now the 10-minute chart this is coming from the highs here at 110 this morning. That was when the ES Mini had traded up to, oh, come on, don't do that to me. That was when the ES Mini had Come on, come on. That was when the ES Mini had traded up. Man, oh man. I hate when the system freezes. There we go. Had traded up to a high of about 2,054.50 out here. So from that high, if we just start counting our seventh inning stretch waves to the downside, we're in that seventh inning right now. Now, it's a 10-minute chart. So on this 10-minute chart, we're at 9:36. We got to wait 4 minutes just for this bar to complete. Then we got to wait another 4 minutes, so that would be 9:50 out here. The key level to be watching, this blue horizontal line on my screen out here, is the 2026 level. Again, if we fail to hold this seventh wave, seventh inning stretch out here, things will just recycle to the downside. We took a look at the A to B equals CD patterns on the 30-minute charts out there that actually begin to form Gartley buy patterns. So at this stage of the game, that's what, and we'll keep an eye on that. So we'll keep an eye on this 10-minute chart here, during the next hour and 20 minutes or so that I'm on the air with you. If we start taking a look at some non-confirming, confirming items out there, what we're looking at is we're looking at the Euro Japanese yen. And if we take a look at the Euro Japanese yen as we speak, now there's a 10-minute, 15-minute delay on this chart out here. It's not confirming this move lower. Now, the reason why we want to be paying attention to this currency pair is because it's a liquidity gauge. If this currency pair were falling apart, and by falling apart, what I mean is trading below the lows of Sunday. If we take a look at from this swing point out here from October 16th, remember our markets made a low on October 16th. Guess what the Euro Japanese yen did? It made a low on October 16th. Coincidental? No, there's no coincidences in life out here. Now, if we take a look at the all the way from that low to the high out here on December the 8th, we can see that price on a Sunday, actually yesterday, I should say. Wait a minute, what am I talking about? Sunday? Well, yes, Sunday. Yeah, it was Sunday. It was Sunday evening out here. That price had gotten down and made a butterfly. So here is a butterfly expansion. In yesterday's candles, what's referred to as a piercing candle. It is bullish. It is a bullish reversal signal, especially when you have some follow through on the very next trading session. Hey, a lot of time left in the trading session, but this stage here, this has not gone south. In fact, this is starting to bounce a bit. We'll see if this thing can close above. Real key for me, it doesn't have to, but a close above the 134.64 today, that would be very impressive. That would be some real follow through inside of this currency pair. So this is not necessarily confirming the move that we have seen to the downside. That's one level. That's one element to take a look at. Let's go check in on the VIX index. Let's go see what the VIX index is doing as we speak right now. 50-day exponential moving average, you know how important that is to the stock market and to be able to use as a guide as to which side of the trade one should be on. Well, the VIX index right now is trading at 1736. The actual There we go. The actual 50-day exponential moving average is at 1723. So within 13 pennies or so, and a lot of time left in the trading session. So what we want to be focused on and paying attention to today is going to be that 1723 level. If price closes below it, we will have a third day in a row, third time is a charm, a third day in a row of testing that area and failing by closing below. So that's another area that we want to focus on and pay attention to. And I think we just keep it really as simple as those elements as we take a look at the marketplace out here. So this is a way to really just keep things in perspective out here. What we know about the S&P 500 is we know that it's got great support, as we looked at with John on the weekly charts out there. We took a look at the S&P futures. We know that they've only done a 0.382 retracement. We've talked about this 2026 level inside the S&P futures as being a very important low to hold. We've taken a look at the seventh inning stretch. We're now there. We're now at 940. So that pattern has come in. And as we're in that seventh inning stretch, we're now on the 10-minute chart. Again, it's a 10-minute chart out here. And a 10-minute chart to use for 10-minute time frames. Nonetheless, you're seeing a bullish engulfing candle out here. But at least you're getting into my mind and really patterns inside the marketplace so that we can really make a good call, so that you and I, what we can use is the information of the markets. We can turn everything else off. We can use just this entire set of tools in order to be able to help us gauge what's going on. So it looks to me like we've got that seventh inning stretch in here. You've got on the 10-minute chart, you had price moving lower with less relative weakness. You got a nice big bullish engulfing candle out here. Now the next key area for us to watch on the 10-minute chart is going going to be a close above the 2031 area. So you're 2029 as we speak right now. Now, it's a 10-minute chart. It's 9:40. We got 10 minutes left. This seventh inning stretch is not necessarily in. Right? Price moves lower and gets one tick below the low during that 10-minute time frame. That would be at a price point of 2020. It would have to get to 2021 and a quarter. Then you start that. Then the cycle continues out here. But at least we have our bearings with regard to what the market either is doing or is attempting to do as we speak right now. So that's, and we'll check back in with that. Maybe at about the when we come back from our next break with about 4 minutes to go. In the meantime, let's go check in on some things that are moving and grooving in the marketplace. Let's go take a look at some of these stocks that were out with earnings before the bell or after the bell last night. Let's take a look at after the bell. Let's look at Microsoft, down about 10% off, 450 out here. Now that is a big gap down, and it's got some pretty good volume in it. 33 million shares. Microsoft getting all the way back into the October 15th level. Not only at 60 million shares out here. Let's put a line across the sand. So that is a big gap down for Microsoft. Oh, come on, work for me, would you? Big gap down for Microsoft. Coming into that area with volume, let's pull this back even further out here inside of the market. In one day, this thing has made the 1-to-1 A to B equals CD is what it looks like to me. Let's go take a look at that pattern out here. The A point being the high on November 14th, the B point being the December 17th low, and the C point being December 23rd. No, it didn't make the 1-to-1. It made the 1-to-1.272 A to B equals CD to the downside. That price projection, 42.26. What we have seen so far is it's trading at 42.41. The low so far, 42.35 out there. Now, that's not how you want to make a D point of an A to B equals CD to the downside. That actually suggests, in fact, if we take a look at the potential butterfly expansion that Microsoft is making, if we go from the low from October 16th to the high out here on November the 14th, the butterfly pattern, if this October 16th level fails, and I see no reason why it shouldn't fail because you've gapped down into that area, you've done it with volume, that would suggest to me that price will want to extend itself, and by extending itself, you'd be looking at about the 39.94 to 40.48 area. But first, it's got to break that October 16th, October 15th swing point. It's October 15th, actually, that it is trading into. That's what's going on inside of Microsoft's world. Let's go check out the world of Caterpillar. Let's go take a look at the big cat, off 7.5%, down $6 and change out here. Let's go see what this is doing. This gapping down this morning. This let's pull this back even further. Let's put this actually on a weekly chart out here as we take a look at Caterpillar. So here's the weekly chart, and Caterpillar is trading down into the swing point all the way back here from looks like October of 2011. Let me pull this back. Let me turn off a couple of tools off of this chart here just to make it a little bit easier for you and I to look at. So let's we'll leave the A to B equals CD, but let's turn that off. Volume, we'll leave that on. So if we take, I don't know if it's gotten down to that swing point, so I wanted to turn it off here just to make sure. It has not gotten down there. So that swing point, by the way, from the trading session of October in 2011, that high is 77.79. Volume on that, and it's a weekly chart we're looking at, was 65 million shares. So far, we're only into the beginning of Tuesday. We're at 14 million shares. No way to tell whether this thing is coming into with volume at this moment, but it does look like that is where it is headed to. Now, it's found support in this area. Again, it's a weekly chart that we're looking at. It found support in this area back the week that began July 9th, 2012 out there. There were 45 million shares down at that level. If we see a close below 77.79, and we take a look at the longer A to B equals CD pattern here on the weekly chart. Come on, expand for me. There we go. Let's go take a look at where that pattern might take us to. Your A point is out here on July 14th's high, the week that began July 14th. By the way, that was 2014. The low out here, October 2014, October, the week that was that October 16th, that day. So you can see you're at the 1 to 1.272. You're coming into it with a wide ranging bar. That would say to me that Caterpillar is more likely going to go ahead and get into that weekly swing point from October in 2011 and probably make a run for about the 72.48 area. We'll see. It's got a first break and crack 77.79 out there. Let's take a look at, let's take a look at the leader out here to the downside. Dollar-wise, it's this Packaging Corp of America. PKG is the ticker symbol. Let's go see what they've packaged up for us. They were out with net sales of $1.4 billion, not too shabby, compared to $1.26 billion from the prior year. Their net income, though, they struggled here. $98.5 million versus $228 million. So that is quite a hit out there to the income line. As we take a look at PKG as the ticker symbol, let's go look at its daily time frame out here. Whoops, that was the monthly. Let's take a look at the daily time frame, see what it is doing out here. So big gap down, breaking a swing point this morning. It hasn't broken a daily swing point for a while. That daily swing point that it's dealing with is January the 7th. That low out here is at 75.95. That swing point only had 518,000 shares. You've done 794,000 shares. It looks like Packaging Corp. Let's take a look at retracements. It's got a nice sign of strength out here, and that's probably where it's headed to. And that took place on October 21st, 2014. 4.5 million shares to the upside. You're coming into it as we speak right now with more volume. That's if the volume continues to maintain itself. So if we go from low to the high out here, its high coming in, looks like over the course of the last 3 days out here on the 82.55 mark. Its first level that it wants to get down to is 72.81. But I would have to say your 0.618 retracement level in the 66.80 area, that gets you into that sign of strength from October 21st out there. That is likely where PKG is headed to. Let's take a look at the so we've got packaging. We took a look at Caterpillar. Let's take a look at Cummins Inc. Cummins Inc. CMI is a ticker symbol. She's down with about $5, 3.5%. Volume on this so far today, about 400,000 shares. Let's go see what this thing is trading into on its daily chart. So this has got a very nice sign of strength. Well, it's a nice wide price spread. Let me see. And it's got some volume in it. And that took place out here on the trading session of October 28th out there. And if we take a look at it, that had volume, if I didn't say 3.7 million shares. So far today, down with 429,000 shares. So it's got pretty decent support inside the 137.52 and the 139.78 range out there. Again, that ticker symbol is CMI, Cummins Inc. Let's take a look at some things here that are moving to the upside out here. So if we take a look at what that is, you've got Waters Corp. WAT is the ticker symbol. That's your leader in the clubhouse, up $4 and change, up 3 7/10%. They were out with numbers as well. Their numbers go like this. Net sales for their fourth quarter, $584 million versus $565, beat in the top line. Bottom line beat as well, $151 million versus $141. Let's go see what this is doing. It's got a nice bar as we speak today, taking out highs. Those highs that it's taking out are from January 9th, only 439,000 shares that were sold that day. You're up and over it with, well, you're not up and over it with volume just yet, but you are headed to it with volume because you've done 128,000 shares. Let's pull this back here a little bit further, see what this thing is doing. So this is at all-time highs, taking out a swing point. This looks like this is going to want to make a nice A to B equals CD to the upside. Waters is the Waters Corp is the ticker symbol out here. The A point, well, I'll tell you where the A point is. Price-wise, it's down at, well, let me tell you, price point is 93.56. That's the low from October 15, 2014. Looks like Waters Corp is on its way up to about the $135 area, and that's assuming that it closes above 117.71 with volume out there. Let's take a look what else is moving to the upside out here. You've got Courier Corp. So the corps are to the upside. We'll have to take a look at that when we get back from this break. Courier Corp up 17% out here. Looks like they have a offer, so that has nothing to do. It's just a buyout out there. But we can go fly a kite when we get back because that's up 3%. It's KITE. Steve Rhodes with TFNN. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Welcome back, folks. Dow's off 292, S&P down 26, Composite down 81 points right now. Quick check-in on the summation index. We'll go back to Kite for the moment. So the New York Stock Exchange, the wider swath of the market, still in bullish condition out here. Its summation index is still above zero. It's at 15.69 out here. So the wider swath of the marketplace, the New York Stock Exchange, still in bullish territory. When the price oscillator is above zero, the summation index is still ticking to the upside out there. That is a trend-based tool out here, and this is a trend-based tool for the wider swath of the market. If I take a look at what we got, net declining issues versus net advancing issues, you got to really use that in combination with what's going on inside of the summation index out there. That's really what its primary use is. We've got 1,350 net declining issues as we speak right now. Advancing issues 730. 2,034. Declining issues, 2,084. Somebody might take a look at that and say that that's just absolutely horrible. Okay, it's not great, but you got to keep that in perspective. That perspective is, well, what's it really doing to the summation index? And at this stage here, summation index is still above that zero line. Now, it gets below zero, whole different story in the marketplace. But at this stage, the wider swath of the market is just kind of saying, hey, you got to throw me a better punch. And not that it can't. Now, with regard to that better punch, let's go back in and check on our 10-minute chart out here and see what we've got. As we take a look at the candles out here, remember we saw price was moving lower, made that seventh inning stretch, gave us a nice bullish engulfing candle. It did that at that 940 session. Well, as we came into 950, hey, we did not get any kind of confirmation. You got to get a confirmation. That very next candle basically erased the bullishness of that prior candle out here. Now we're making a run for the lows. We're below 2026. Stevie doesn't like to see that. We're now headed down to maybe test the lows of that bar, which is at the 2021.50. I don't know whether we're going to test it or not, but I do know that the seventh inning stretch candle would actually go ahead and recycle out here, and that says then you'd be looking at continued lower price. Of course, what you and I both know, what that lower price then means, you go back to the 30-minute chart out here. That was a 10-minute chart. It's going to be easier for me to do this. I think it was on the 30-minute chart. Was it not on the 30-minute chart out here? It was. And that 30-minute chart is looking for that spike down into, what did I do? What did I do out here? What did I do? Let me, maybe it wasn't a 30-minute chart, but we're going to make it the 30-minute chart. Okay, so that price point is 2017, 2017.75 if this seventh inning stretch candle fails out here. And at this stage of the game, my expectation would be that it would fail. But, you know, I'll just simply come back and take a look at each 10-minute bar, and then we can go ahead and read what the message is as of that moment. One last check-in here of the VIX index. Right now, it's trading at 1762, so it is above the 50-day exponential moving average at 1724. The problem there for the bears, if the market were to close here right now, I would tell you that the market will bounce, and the market will bounce because you've had more than a well, let me see. The VIX index so far right now is up by about what, 13.5%, up at $2.10, trading out at 17.62 out there. So we didn't take a look at gold or silver, any of the other currency pairs. We'll do that during the next hour. If you are off to start your day, thanks so much for joining us here at TFNN. If you're up in the Northeast, I hope that you're warm. I hope that you've got electricity. And as always, thanks so much for joining us here. It is Terrific Tuesday. That means following the next hour, well, of course, next hour is going to be the hour 2 of the Trader's Edge. Then we got Basil Chapman. I'm assuming his power is on. I haven't seen any notification that it's not, so that's a good thing. Basil will be with us. We got the Options Hour. We've got Daryl Martin. We've got David White, Tom O'Brien Show, and, of course, Andy Heck to take us home. Folks, have a great Tuesday. Look forward to seeing you in the morning or maybe in about 10 minutes. Take care.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
You're watching Tiger TV.